And it's 10 a.m. right here in Lagos. Good morning, good evening, wherever the world you're watching from. It's Business Morning, live from Channels HQ. I'm Ladi Williams. Great to have you join us. Let's take a look at what's happening in the oil market. See, oil prices steady today after retreating more than 3% in the previous session as investors gauge the impact of easing Russia-Ukraine tension against a tighter balance between tight global supplies and recovering fuel demand. Brent traded at $93.19 a barrel in early trade, down 10 cents, having slid 3.3% overnight. After Russia announced the partial pullback of its troops near Ukraine, yet to be verified by the United States. U.S. West Texas Intermediate crude also held steady and blast traded at $92.13 earlier after the contract ended Tuesday session down about 3.6%. Both benchmarks had hit their highest since September 2014 on Monday, with Brent touching $96.78 and WTI reaching $95.82 a barrel. The price of Brent jumped 50% in 2021, while WTI soared about 60% as the global recovery in demand from the COVID-19 pandemic strained supply. And back here, President Buhari Tuesday submitted the 2022 Appropriation Amendment Proposal to the National Assembly. The amendment proposal is contained in a letter from the President, which was read during plenary. Senate President Ahmed Lawan and Speaker of the House of Representatives Femi Gbajabiamila read the letter in their respective chambers. In the letter, President Muhammadu Buhari said the amendment is necessary to accommodate some issues in the country, including petrol subsidy, which must be considered. In the letter, President Buhari is asking the National Assembly to approve the sum of 2.55 trillion naira supplementary budget for petrol subsidy from July to December 2022. For some analysis now, we have Professor Akwanepo joining us via Zoom. Great to have you, Professor. Good morning. Hello, Professor.
Yeah, good morning. Thank you for having me.
Good morning. Great to have you. So, what are your thoughts on this supplementary budget? Hello, Professor.
Call to receive on the subsidy removal, so they had to send supplementary budget to the House. The House will now do its oversight function to scrutinize it, make sure that the estimate makes some sense. And then thereafter we'll see how it goes. But it's normal that they have to do that, and the House has a duty to carry out the oversight function, make sure that the 2.55 trillion makes some sense, and I hope that after this we'll do first things first. We'll get the refineries working, so that at least we can refine petrol for domestic use, if nothing else. So it's a good development. I think the executive branch must have done its work to have sent an estimate of 2.55 trillion. Now the House will now do its own work to make sure that it is right, or at least make some adjustment if necessary. But it's a step in the right direction. Because okay,
it's an additional 2.55 trillion naira. What are the funding options here?
The funding options is very tight. If you don't raise domestic resources, then you have to borrow externally or borrow internally. Those are the options. But definitely, it makes sense because you don't want to remove subsidy and bring untold hardship to Nigerians who are already suffering. So those are the options. Or you do what we call expenditure switching. You look at your expenditure profile and see what you can cut off or what you can switch, and then maybe you cost, and then perhaps reduce some of the items in the expenditure profile. Those are the options, really.
Okay, and putting the expenditure on a scale of preference. All right, Professor Akwanepo, well, thank you so much for coming on the program and giving us your thoughts.
Thank you. Thank you for having me.
Thank you. All right, so after the break, we'll take a look at the U.S. Prosper Africa Initiative and improving trade investment between Africa and the U.S. That's after the break. Do stay with us. Right, now to our next conversation. In a bid to advance trade and investment between Africa and the U.S., a delegation is leading a Prosper Africa initiative with visits to Nigeria, Kenya, South Africa, and Namibia. To tell us more about this, we have the Deputy Assistant Secretary of State for African Affairs, Kuna Cook, joining us on Business Morning. Great to have you.
Good morning, Laddie. Thank you for having me. It's wonderful to be here in Abuja.
Great to have you. Well, you've been in this role for quite a while now, and how have you been able to articulate the vision of the Biden-Harris administration's, Africa policy, particularly on topics such as entrepreneurship, trade and investment, digital economy, and creative industries?
Yeah, so I've been in this role for just under a year now, coming up next month on March 1st. And the past year has been incredibly busy. We've been hard at work ensuring that promoting trade between the United States and Africa is a top priority for the administration. Part of that has been working and rolling out the Prosper Africa Build Together campaign, which we did last summer. The campaign is focused on improving investments, particularly in companies and entrepreneurial ventures by diaspora, women and small and medium-sized enterprises. It is two-way trade and investment, so we are also focused on improving and working with African-owned businesses, and particularly those owned by women, small businesses, and so really trying to leverage all of the resources of the United States government across the 17 agencies that make up Prosper Africa to ensure that we see the kinds of investments into Africa's young people, into Africa's women, and into the many wonderful opportunities that exist here on the continent.
Yeah, but for over 20 years now, U.S.-Africa engagement has received, bipartisan support in Congress, particularly on strengthening public health, developing local infrastructure, political stability, and advancing trade. With your experience in and out of government, what are the greatest strides, you've seen as a result of U.S. engagement in Africa?
Well, for sure, the greatest stride and the greatest improvement we've seen over the past 2 to 3 decades has been in the area of public health. The way that we have been able to partner with African governments on PEPFAR, reducing HIV/AIDS. We now have several countries and more every month that are reaching epidemic control. We've also been able to partner to fight malaria, tuberculosis, and other infectious diseases. And it is that partnership and the foundation that we built over two decades that has led to the response that we now have on COVID-19. And so that health infrastructure that has been built across African countries has built the foundation for us to not only respond to COVID-19, but future pandemics. But trade and investment is another area where the United States and Africa have meaningfully partnered. And we are looking to boost that now more than ever. I'm here in Nigeria, moving on to Kenya, South Africa, and Namibia, because the United States recognizes the enormous potential in a number of growing industries, including the creative sector right here in Nigeria, where we see great strides and potential as an economic driver in the arts, including film, music. We see tremendous opportunity in the digital and technology fields, particularly given how young, bright, and innovative young people here in Nigeria and across the continent are. So we know that we have to get in now, and we have to make sure that we're driving these investments to make sure that we're part of Africa's future.
Quite interesting. And I understand you're leading the Prosper Africa Economic Diplomacy Delegation, across these countries. And Nigeria is your first stop. What categories of business leaders and policymakers would you engage with, during your visit here in Lagos and Abuja? What do you hope to achieve, at the end of this 4-nation visit?
Well, I kicked off this tour in Lagos, Nigeria, because of the tremendous economic activity that's happening in Lagos, and with a particular focus on the creative industries. As I mentioned, we see the creative industries as a significant opportunity for Nigeria economically. It is a significant driver of GDP, employs over 500,000 people and growing. And we hear, Nigerian music in as far as places as Iceland to New York and Washington, D.C.s, and everywhere in between, and certainly all over the continent. We see the influence of Nollywood across the continent and across the world. And so not only is this an industry that is growing and that has the potential to contribute to to Nigeria's economy, we also see digital and technology as another area where Nigeria can play a significant role in leading the fintech revolution and the revolution in climate technologies, and helping to find the kinds of African solutions to global problems that we are all in need of. And so that begins right here in Nigeria, where we are talking to entrepreneurs, we're speaking to investors, and we're speaking to policymakers about how the regulatory environment, the enabling environment can be improved in partnership with the United States to make all of these objectives come to life.
Quite interesting. You did mention Nigerian music. Maybe I'll get your favorite Nigerian song later on. but in what ways, is the U.S. government helping to bring, private sector and the African business community together, to help address some of the continent's most pressing challenges, including, building modern infrastructure, creating jobs, opportunities for young people, and expanding, access to education and the digital economy?
Sure. So one of my favorite examples of a recent activity that was done by Prosper Africa and USAID in partnership with several other U.S. government agencies is the investment by the Chicago Public School Teachers Pension Fund. They recognized the growing potential in African markets and invested $20 million into the capital markets here, into the businesses here, and that's bringing return to the pension fund, but also providing much needed capital to African businesses. We've also worked with a small shea butter business based in Ghana to help them export their products into stores across the United States, Target stores. And so those are some of the examples of the kinds of work that we're doing. But we're really helping to ensure that U.S. companies, investors have the one-stop shop that is Prosper Africa. They can work with our embassy and consulate deal teams on the ground. They can go through prosperafrica.gov. They can go through the Department of State or USAID. In essence, by ensuring that our resources, that the tools that that all of the U.S. federal agencies that are involved in Africa trade and investment are harmonized and coordinated, we make it easier for the private sector to access African markets, we make it easier for investors to access African markets, and we make it easier for African businesses to access the United States. And it is this sort of two-way trade and investment that we see as being part of the U.S.-Africa relationship and a priority for the Biden-Harris administration.
Right, and we see women entrepreneurs in Nigeria are a growing market force right now. But how does the U.S. government seek to, support women's inclusive participation in the economy in Africa?
So there's a fantastic program called Tech Women, which takes applications from all over the world. It brings women who are involved in the technology industries to the United States. They meet with partners in Silicon Valley, investors. And I was surprised to know that half the applications for that program came from right here in Nigeria. This is just one of the many ways that the United States government is investing in the capacity of women who are interested in technology and technology-related businesses. But we are also doing a lot of important work to ensure that there's connectivity and encouraging our companies to invest in Nigeria in terms of its connectivity, invest in its its human capital development, and to work with the policymakers here to ensure that there's an enabling environment, that the regulations here in Nigeria are encouraging to businesses to make those kinds of investments.
And, looking at a growing population, it's often said that Africa's fast-growing population and markets present tremendous long-term, growth opportunities. But what are the greatest, opportunities that the United States see on the African continent today?
Fantastic. So yes, there are so many opportunities, as I've mentioned, the creative industries, all of the supporting infrastructure that is created by the industry, so the technical expertise, the business expertise, the legal expertise that is needed to maintain and drive the creative industries. Of course, digital technologies, particularly in terms of climate. This is definitely an area where I believe that a solution that can help us address our climate challenges could be found right here in Africa. We saw that in financial technologies as the fintech revolution began right here on the continent. And so there are all of these opportunities that we should be leveraging and that we can leverage. And so I look forward to having more discussions, particularly here in Abuja, with policymakers, entrepreneurs, and others to understand how we can work better together to ensure that we are making the kinds of investments in young people, because we know that this brilliance and this innovation is right here in Nigeria and across the continent.
All right, let's look at, Africa trade now. The Africa Continental Free Trade Agreement, has the potential to boost growth, reduce poverty, and, broaden inclusion across sub-Saharan Africa. But in what ways is the U.S. government helping to achieve many of the AFCFTA's objectives?
We are 100% behind the implementation of the AFCFTA. Secretary General Wamkele Mene had a successful visit to the United States back in December and engaged across the U.S. government. We are looking forward to supporting his efforts, and in fact, his focus on digital technologies, on young people, and on women is in line with many of the foreign policy goals of the United States. When the AFCFTA is fully implemented, Africa will be the fifth largest trading bloc in the world. With 1.3 billion people, this is a market that will be attractive to everyone, and certainly to the United States. We know that regional integration will make it easier to do business here in Africa, and so we are working with the AFCFTA and in consultation with the AFCFTA to ensure that the U.S. private sector is engaged, and that we are here and showing up, and that as the AFCFTA is implemented, that the private sector, the U.S. private sector, is considered and is part of that rollout.
All right, we'll keep tracking your tour here in Africa. Akuna Cook, Deputy Assistant Secretary of State for African Affairs. It was great having you on the program today.
Thank you for having me.
All right, after the break, AFEX Commodities Market is next. Do stay with us. This is Business Morning. All right, it's time for AFEX Commodity Update. Now, for the week ended 14th February 2022, the AFEX Commodity Market Summary was mixed, with a number of deals in the red. We have an analyst structuring and origination at AFEX, Femi Kende, now with the details. Great to have you, Femi.
Great to be here, Ladi. Good morning.
Yeah, good morning. So how's the spot contract, fared since the start of the season?
Right, so a bit of a background to the spot contract. So what we've done at AFEX, given that we have the mission of enabling the transition of funds from the commodities market to the capital market and creating shared prosperity at the end of the day. The spot contract is designed in such a way that for every unit bought on the spot board, there's a corresponding unit in an approved warehouse. Generally, we've seen the performance of some sports contracts on the exchange perform return superior since the start of the year. For instance, maize has returned over about 20%, cashew over 30%, and soybean over 10%. For the week, we saw an increase in the level of performance on the exchange in terms of the turnover, the volume traded, and however, the number of deals declined significantly for the reporting week. In terms of turnover, we saw the exchange close about 2.18 billion naira trades, representing a 35% increase week on week. For the volume traded, we actually saw the execution of 9.4 million contracts, representing a 77% increase week on week. However, for the number of deals, we saw a slight decline of about 12% week on week, as 709 deals were executed. For the financial benchmarks on the exchange, the FX Commodities Index declined marginally by about 0.82% week on week, while the FX Export Index increased marginally by about 0.97% week on week. In terms of the volume traded across commodities listed on the exchange, maize accounted for over 90% of the trades, as 8 million contracts of maize were executed this week. However, sorghum, soybean, paddy rice, cocoa, and cashew were traded for the reporting week. For commodities prices, we actually saw the uptick in the performance of commodities like maize, paddy rice, soybean, and cashew, as maize closed the week at 248 naira per contract, representing a 0.63% increase week on week. Paddy rice closed the week at 230 naira per contract, representing a 1.45% increase week on week. Cocoa closed the week at 1,251 naira per contract, representing a 1.92% increase week on week. And cashew closed the week at 605 naira per contract, representing a 17.65% increase week on week. However, we saw a slight decline in soybean prices, as the commodity closed the week at 409 naira per contract, and sorghum closed the week at 227 naira per contract, representing a 7.15% decline week on week.
All right, Femi, I don't know
about.
Yeah, carry on.
For more information about our report, you could actually check our website, which is www.afxnigeria.com, or you can follow us on our social media handles at Afex Nigeria or Comex by Afex.
All right, Femi, but I don't know about you. I couldn't get fuel this morning for my car. But do you see the current scarcity of fuel affecting commodity prices?
So it's a dicey thing to say that right now the current cost or scarcity of fuel could actually trickle down into commodities prices. But if this current situation lingers into the short term, into the medium term, we could actually see a significant hike in commodities prices. This is as a result of the fact that most of the producers, or a significant proportion of the producers that actually produce these commodities, stay away or out of the proximities of consumers. What this means is that logistic providers are always needed in order to transport these commodities from where it is highly produced to where it is highly consumed. And at the end of the day, the prices of logistics is added or priced into the commodities prices at the end of the day. But given that this may be a short-term effect, we envisage that it might not have a significant effect on commodities prices. But we know that if this should linger into the medium term, we would see an uptick in commodities prices due to the fact of increased cost of logistics.
All right, Femi, I hope it doesn't linger. That's Femi Kende, analyst structuring and origination at Afex. Thank you so much, Femi. All right, now to part two of the conversation. Well, trading agri-commodities as an investor can be an important way to diversify, portfolios beyond traditional securities, where market realities have shown over the years that prices of commodities tend to move in opposition to stocks. And we see rising global inflation right now. Every investor is looking for that sweeter hedge. Let's talk to Michael Martins, now portfolio manager at Afex. Great to have you, Michael. It's been a long time.
Hi, Laddie. Good morning. It's always a pleasure to be here.
Yeah, great to see you again. Well, in discussing how investors can trade, agricultural commodities, what are the critical concepts, to learn about agricultural commodities before actually trading them?
Thank you very much, Laddie, for that question. And I think it's broadly important, considering where we are in the commodity market cycle. In terms of the concepts that you would have to learn in order for you to start trading the commodities market, I think the first and maybe most important of all, would be for you to learn about the laws of demand and supply. I think that's a law that applies to any market anywhere on the face of the earth, and then and then understanding how that plays out, in the commodities market over a given, trading period. Aside from that, you also want to acquaint yourselves, with the macros, the macroeconomic indicators that affect the commodities market on a day-to-day or maybe even on a weekly, to a quarterly basis. Some of those macroeconomic indicators would be the interest rate, which fundamentally underscores, capital flows from either stocks to bonds, or maybe even alternative assets like the commodities market. You also want to follow the inflation rate, which tends to act as a lagging indicator of what has happened in the commodities market over a given period of time. You also want to pay attention to exchange rates too, because that feeds into the import parity. That's comparing the price at which some of these commodities are bought locally, in comparison to their price internationally. Lastly, of course, you also want to make sure that you're paying attention to government policy, because the government is largely interested in the commodities market and the agricultural sector by extension. I think another thing you also want to understand when it comes to investing or trading in the commodities market is also you want to understand the commodities market itself, right? So depending on the commodity that you're exposed to, or depending on the financial product that you're exposed to, you want to learn as much as possible, expose yourself to as much literature as possible, so that you're well acquainted with the price dynamics, the capital flow dynamics of the particular product that you're invested in. And lastly, you also want to understand the business, that you're invested in itself. And I think that would also feed into the second question you're going to ask, which is basically to compare, the exchange model that we have, also with the crowdfunding model. You also want to understand the business that you're in, and then make sure that the business can guarantee the returns, that they claim to be able to guarantee.
Yeah, quite interesting, because I was wondering, this whole crowdfunding model thing, most of them have failed. How do you compare with the exchange model?
I think the key differentiating factor, right, between the crowdfunding model and the exchange, based model, which is what we run at AFEX, is we are a highly regulated, entity, right? And what that means is that every single thing that we do in the organization is under the scrutiny of a regulatory agency, whether that's the Securities and Exchange Commission, paying day-to-day attention to what we do on the exchange, or whether that's with regards to the rating agencies, which help to rate our financial products, whether or not they're good enough for us to be able to serve, the end investor or even other participants across the, agricultural value chain. I think that's the biggest difference, between the exchange model and then also the crowdfunding model. Another difference would also be that when you think about the exchange fundamentally serves as an intermediary between different participants on the in the agricultural market. So on one side, the exchange acts as the buyer to the seller, and then also acts as the seller to the buyer. That's fundamentally different from what the crowdfunding model does. Another key difference would also be that with the crowdfunding model, there is a tendency to guarantee returns. So it is the case that when you put a certain capital, when you outlay capital, to the crowdfunding model, you're going to get promised a particular percentage after a given period of time. That is never the case, with the exchange model. Yes, we do have financial products that are rated by rating agencies. Yes, people can invest in these financial products on our, on our COMEX app, but it is never the case that we will guarantee any fixed rate of return for any given period of time, on the exchange with any of these financial products.
All right, but what are your thoughts on, how commodities exchange is revolutionizing Africa farming investment?
Thank you very much for that question. I think it's partly important. It's extremely important, rather, because our primary vision as an organization is to help Africa feed itself. And I would speak to what we are also doing, as a commodities exchange. And I would speak broadly about three different things that I think the commodities exchange model does in terms of contributing to revolutionizing commodities or agriculture in Africa, first off would be capital. We all understand fundamentally that nothing grows unless capital is introduced into that system. So what we do as an exchange is to create financial products that allows for capital flow, from investors that want to invest into the commodities market, and then create that financial product so that they can have access to investing in the commodities market. Secondly, would also be with regards to infrastructure too, right? So think about some of the storage infrastructure that we have, on the exchange, really allows us to, not just aggregate these commodities, but also store them for an extended period of time, and serving as a means to protect against price volatility of some of these commodities. That's also extremely important. Add upon that the trading infrastructure that also currently exists on the exchange in terms of COMEX and people being able to trade, commodities on the exchange. I think that's also extremely important because it not just allows for, the exchange of capital from one person to another, it also helps the ecosystem to grow in general. And I think lastly, and maybe, of course, not least importantly, would also be markets, which is basically the exchange serving as a buyer to the seller. There is a quote, I believe, in South America, which says, market is the best fertilizer. That is the best fertilizer that you can give to any smallholder farmer in any given period of time is market, and not even necessarily, NPK fertilizer or any of those other things.
All right, but with this storage facilities and funds to mop up crop, would you say Nigeria is close to closing the food production gap anytime soon?
Laddie, I honestly don't think that that's the case. And let me just give you a bit of perspective on what the scale of the problem is. So currently, as of today, there is a $65 billion gap with regards to agri-SME financing in sub-Saharan Africa alone. Right, if you take into perspective the amount of money that AFEX has raised from the capital market vis-a-vis the amount of money that trades on the AFEX exchange, and maybe even in the broader commodities market by extension, I'm not even sure that amount is not a lot, right? So AFEX did about $100 million last year. Even if you multiply that times 10 to account for every other entity that plays in the agricultural value chain, that number is still about $1 billion, which means that we'll still have about $64 billion to go. So in terms of us closing the gap, we are nowhere near we need to be, but I can certainly say that we are on the right path, and we will get there in time.
On the right path, that's a good sign. All right, Michael Martin, Portfolio Manager, AFX, great talking to you. Thank you so much for coming on the program.
You're always welcome, Laddie.
All right, we'll take a moment now. All right, let's take a look at what's happening with the markets. Anita, how's it looking?
Well, good morning, Laddie. I'm reviewing Tuesday's trading, and first I'm starting with the fixed income market. I think the fixed income market is gradually getting its bounce back because at the close of Tuesday's trading session, the fixed income market, both the bond space as well as the treasury bill space were in the bullish part. So this is how it turned out for the bond segment. Total number of deals was 5, and then of course we had investors buying interest, which was mostly on the February 2028 and the March 2050 bonds. Of course, I would have given you much information on that, but I think I'll let our fixed income analyst, Caleb Alimi, who's a fixed income trader at FSDH Merchant Bank, to tell us more about what happened at the fixed income market and, of course, what is currently happening at the fixed income market. Thank you for joining us, Caleb.
Thank you for having me. Good morning. Okay,
now I have 2 questions for you, but I guess you just have to wrap it up in just a split second. One, the NBS, the National Bureau of Statistics, released the inflation report for January, which showed that inflation was down month on month by 3 basis points in contrast to what it printed. 15.60% is what it printed for January. And then, of course, how investors reacting to it, as well as the bond auction by the Debt Management Office today?
Okay, thank you. First off, the drop in inflation is really marginal, like you mentioned, 3 basis points. Typically, we don't see a strong impact in our market. What largely drives our market to be the benchmark rate, which is the monetary policy rate. If there's a movement to this rate in response to inflation, then we'll probably see a movement, a corresponding movement in our markets. But at the moment, there is absolutely no strong implications for the market, given the marginal move and given that NPR has remained flat for a while now. In the bond market, there is a bond auction today where the DMO is offering 75 billion each of the 2026 and of the 2042 papers, at the auction. Given the much liquidity that we've seen in the system, we expect that rates are going to marginally decline on the short-dated paper, which is the 2026. But for the 2042s, we find that investors are demanding slightly higher rates, and we expect that will close slightly higher. The last auction for the 2026 is closed at 11.5. However, market is currently trading around the range of 11.2, so we expect it to close around that 11.2, 11.25. On the 2042s, it closed at 13% at the last auction. Market has traded largely around 13%, so we think it's going to marginally tick upwards to say 13.05, between 13 and 13.05%, as investors continue to express their interest for slightly higher rates, given the fact that there's a larger budget deficit. I'm sure you know that the FGN just sort of approved a further deficit of about over $6 billion to fund fuel subsidies. That will find its way sort of into the bond market, and so we expect investors to continue to show interest for high yields, and we'll see that play out for the 2042 paper.
Okay. Thank you, Caleb. So I think investors really will keep an eye on the bond auction for today. So thank you for that analysis. That was Caleb Alimi. He's a fixed income trader at FSDH Merchant Bank. So now, to the stock market, it was what we call flattish positive. This is how it turned out yesterday. But when you look at this figure, it's a slight, improvement in contrast to what we had on Monday. So there's just some few basis point increase. And then in terms of the value, we had over $1 billion added to the total value of listed equities. And this was largely driven by bargain hunting on the shares of MTN Nigeria as well as Boas Cement, which helped the market to regain some balance in contrast to the losses that we had on Monday. Then, of course, we had a positive market breadth, 27 gainers in contrast to 20 losers. When you take a look at the sectoral performance, it's kind of a mixed bag there. Some profit taking on the banking sector counter. Industrial goods was also mildly down 0.02%. In terms of value, volume, and deals, it was all in the red. Of course, the Tuesday's trading session, it came with kind of a mixed bag there. But of course, in today's trading session, we're expecting that investors will be taking advantage of some of the losses that was recorded in Monday's trading session. Earlier, some of the stocks were down, so investors will be picking up from those lower share price of some listed equities. The market is all about making money. They have been making money, but so far the month of February, which we currently are, is still within the positive region, mildly positive, 0.9% up. Year to date, we're up 10.12%. So that was for the activity chart. Then for the unlisted securities market, it was down by a blip, 0.01%. The securities index is at 751.92 points, while the market cap is still very much within the 636.71 billion naira value, which is still has not really moved within the last 2 days. So, Ladi, that's how the market is.
Quite an interesting close yesterday. Flattish positive.
Flattish positive. That's
flattish
the
green.
Exactly.
All right, Eze, thank you so much for the analysis. All right, we'll take a quick break now. When we come back, we head to London. That's the moment. Just stay with us. All right, let's take a look at what's happening in the UK. We see UK inflation has hit a new 10-year high, intensifying cost of living squeeze hitting households. Data just released by the Office for National Statistics show consumer prices rose by 5.5% in the 12 months to January. Let's hear more now from Juliana right there. Great to have you, Juliana. So it's a 30-year high, somewhat expected. How's the data been, digested over there? I heard some say it feels like 15% when you're shopping at the local supermarket.
Yeah, it's pretty tough here in the UK at the moment, Laddie. Before the end of last year, economists said the UK would be experiencing a year of the squeeze, and it certainly feels that way. As you said, inflation has jumped to a three-decade high of 5.5% for the month of January. A lot of economists had benchmarked that it would be at about 5.4%, which is the same rate that it was in December, but alas, it's come much higher than that. The big drag on inflation was footwear and retail prices. Typically in the month of January, you do see January sales or Boxing Day sales, which are really popular in the UK, but because high street retailers didn't get what they wanted in December because of the fear of Omicron, sales just were not as robust as possible. They kept their prices up, and that has dragged down on inflation. I think this is really now adding the pressure on the Bank of England to further increase interest rates. It's currently standing at about 0.5%. There are some individuals that are saying it should be increased by 50 basis points, which would push interest rates up to 1%. Now, that may try to curb inflation in one corner, but in another corner, if you have a non-fixed rate mortgage, then your mortgage prices will go up every month. So it's not looking great, not great for everyone at the moment. And this is even before we get to that really key time in the spring in April when we see a rise in taxes and a rise in energy bills.
Yeah, I guess I have to find another time to visit you in the UK there, Juliana. But I see UK wage growth picked up in January as job vacancies hit a new record high, but pay has failed to keep pace, with highest inflation rate for about 3 decades. But I guess it's a good thing, wages inched up.
Well, I suppose it depends on how you look at it. If you look at the headline figure, yes, we have seen that wages are growing, but the fact that they're not growing at the pace of inflation means actually people are seeing their wages fall. Wages are not rising at all. I think for the 3 months to December, wages came in at about 4.3%. In December, inflation was at 5.4%, which means that people have actually experienced a fall in their wages by 0.9%. And this is all according to, again, the Office for National Statistics. We had a robust labour market data yesterday. So, yes, of course, you've always got to look on the bright side of life. Don't want to sound too dull and miserable, but in actual fact, no, wages are not rising. Wages are falling here in the UK.
Right. All right, Juliana, thank you so much for the update. Enjoy the rest of your day and happy shopping.
Thank you.
All right, now let's take a look at other markets there. We see let's look at Bitcoin. We see Bitcoin there having a nice little recovery there. Look at market cap, $1.98 trillion, up by 4.53%. Volume traded at $75.87 billion, up by 3.59%. Let's look at the Fair Greed Index today. It's neutral at 51 points. Yesterday was fear. So we see traders trying to get back to that greedy part of the market. But right now it's neutral, not bad at all. Let's look at the price of Bitcoin, about $44,076 early this morning. We see Bitcoin try to move towards 45,000, but failed to cross that 45K resistance. Bitcoin is currently correcting lower, but dips might be limited below 42,800. We see Bitcoin extended an increase above 44,000, kind of exciting the market there. We see altcoins also jumping about double digits this morning. Let's look at Ethereum there. It's holding up quite nicely above the $3,000 mark, up 5.72%. Volume traded in Ethereum, $13.62 billion. Ethereum not looking bad this morning. All right, look at the top alts by market cap. We see BNB there, $430 per coin, up 1.54%. It's quite lean there. Looking at the gains, we see just Cardano inching up over 2% there, $1.10 per coin. Solana, $103. It's up by 1.95%. We see XRP there, 83 cents, looking like a stable coin, but around 80 cents, which is not bad, up 1.90%. All right, let's bring in Gilbert Jopata now, a digital market analyst. Hello, Gilbert. Good morning.
Yeah, good morning, Mr. Laddie.
Yes.
Always nice.
Always great to have you, Gilbert. Well, I see there's been a steady increase in market dominance for altcoins. You know, I'm wondering, why is this happening, and what does it mean for investors?
All right. Whenever investors move from Bitcoin into alt, we always see an increase in alt market cap and then a decrease in Bitcoin market cap. We have seen Bitcoin move from 80% market cap share to about 50-60% share in later years. Today, Bitcoin sits at about 41% share of that market cap, while alt sits at about 51% share of the market cap. Interesting and not surprising, we see Ethereum having about 20% share of altcoin pie, which is about half of the market cap of Bitcoin. The last time we saw something like this was in 2018 when Bitcoin market cap hit a historical low of about 32%. But what's happening now is quite different. Bitcoin has gone mainstream with adoption from institutions and government. And this is so also for alt. They are no longer babies anymore. There is a growing use, adoption, and presence of institutional investors in top alt like Ethereum, BNB, Solana, Cardano, and a couple of others. So right now, we expect a decoupling of these alt from Bitcoin, and also we expect them to also have a fair share of the market cap. This also means also that in the midterm or short term, it may become normal to see Bitcoin having the market cap of about 30% to 20%. It may become normal. Investors need to understand that whenever we invest into the cryptocurrency market, we are investing into disruptive technology. Bitcoin have achieved its purpose as a store of value. But we also have alt that have a solution to the marketplace. They don't want to be the next Bitcoin. They are not Bitcoin. They also provide solutions into the marketplace. This also shows that we have more solid assets other than Bitcoin in the marketplace where investors can also invest their money into.
All right, Gilbert, I'm going to ask you the popular question, what every trader wants to know: when alt season?
We need to watch Bitcoin. We would like Bitcoin to do well. If Bitcoin does well and Ethereum does so as well in price increase, and then we watch out more for decoupling for a decrease in Bitcoin dominance, then we will know, okay, alt season is near. For us to know when alt season, we need to look at these metrics to anticipate it happening.
All right. Thank you so much, Gilbert Jopata there, our crypto market analyst. Thank you so much. All right, that's a wrap on the program and the crypto segment. Don't forget to join us at 1:30 on Business Incorporated for more updates and developments in the world of business. Thank you so much for watching. I'm Ladi Williams. Bye-bye.